One of the best routines that we have for scalping the market, wherein we can expect at least 2 to 3 ticks off of a trade or more, is to look for where the premium is projecting the market will go, and then where to get into that trade before the market gets there. So we look for where the premium projects the market will go, and then we look for an opportunity to enter the trade before the market gets to that particular price. We need to see some kind of anomaly in the premium as well as divergence in order for this to work. So let's take a look at some examples. Now, off of this high, wherein we've already established that this market is coming down, you'll notice that the premium at that particular time is at 744. Being that there is a direct relationship between the highs and lows of the ES and the highs and the lows of the premium, when the market comes down to a lower high, the premium should be lower than it is up here. But as you can see, it is not. It's at 744. That's a fairly good indication that that price is going to be tested. We need to see the market drop below that price. If it's really going to be coming down. So here's what we do. As the market drops, now what we're doing is we're looking for an opportunity to get into a trade, to watch this retrace back up here to 47.50 or better. Now we look for divergence. Our first low on the premium is at 8.30. Then we get divergent at 8.20, and we're at a lower low. So here's an opportunity to execute a buy. And if not there, or even higher, we've got higher lows on the premium in here. So we take a long trade with expectations that will move back up to 47.50. So we have to do this very fast, as we're looking on a 5 second bars here. So perhaps you get filled at 46.50. You've already got 47.50 as a target. You put in a limit order where you get ready to exit, and up she goes. And there you have your first one. Let's look for another opportunity. Next opportunity happens right here. Okay. Notice, premium is at 753 here. It's a lower high on the ES, but a higher high on the premium. So this is suggesting that we're going to go back to it 46.50 or better. So now we just look for an opportunity to get into this. So we need some divergence, and that's what we see happening right here. We have an OS at 808 and another OS at 795. It's all stepping up, so we have to act fast. We don't get much out of this trade. It'd be very difficult to get in here unless you had a limit order that managed to get filled. But it moves right back to where it was before. And then you're divergent, and down she goes. Now, you could short that. That's true. But that's not quite the routine that we're talking about here. Let's look for another opportunity. Now, the next opportunity is much more significant. Look at the lows of the ES. See how they're coming down? And look at the lows of the premium. Now, they were stepping up here. Then they dropped a little lower, as they should. but then it dropped considerably down here. So that's indicating that we're going to come back to this price, if not lower. So it's possible that we may want to short this before it gets there. But right in here, the premium moves up. And that's really indicating that this market is going to go higher, not lower. So now we come down to this point, and overall, if you look at where the premium level is, we're still much lower. 825 compared to 14, and to 10, to 19, to 19, or to 15, to 19, to 20. This is really way too low. So we can expect that this market's going to be coming back to 44.25. So all we need to do is look for a divergent situation that gives us an opportunity to enter a short trade back to 44.25. The first opportunity that we have that's higher or equal to 45.50 is right in here. And we get a higher reading on the premium than the previous bars, but it is divergent. And then it's real divergent right in here. See how the premium is dropping. The highs of the premium are dropping. We want to short that. Now, as it turns out, this market moves up a little higher. Okay? So, trying to get in on this trade, there's a little bit of a risk there. Okay? A little bit of a risk. Nevertheless, you still have high probability that this market is coming down. And one thing that may have been the heads up as you execute, a short in here, when the highs of the premium go considerably higher, you know that this trade is at best premature. Now you don't know exactly how high it's going to go, so you may want to stop yourself out and enter again, but you already have a target here. So depending upon your risk tolerance, you can either absorb that or allow yourself to get stopped out. But that having been said, now you see the divergence forming below the level of 76, and we're at a new high, and then we finally drop here, and we enter that trade, and down we go. So even if you get in at 46.25, you don't become divergent again until we're down at 44. So that's a nice 8-tick move. Nice scalp, and nothing standing in your way. Nothing at all standing in your way of entering into this trade again. Beautiful 8-tick scalp. The next situation occurs right in here. Look at how the premium is behaving. Premium is moving up. Got a divergence here, right in here, and higher low here, but an equal low there. This and this are equal. Market is down 44.50. This level of the premium should be equal to or greater than this because the market moves up. Of course, you don't know that right there, but immediately thereafter, you see this market is moving up. And this has left you with a footprint, fully expecting that this market should come back and test that level. So what you want to do is enter into a short trade on a divergence of the premium. As the market comes up to this point here, it's only relatively divergent. It's been moving right at around 730 now for the last several minutes, 7:32, 7:35, 7:30, 7:37, 7:30. Not much divergence there. But compared to the previous bar up here, there was some divergence, and this market moves down. Now, it doesn't go long enough and you get an oversold condition telling you that we're not quite ready to move down there yet. And so you had an opportunity to get out of that trade since we didn't quite make it that far. But that doesn't change the fact that that is still a target. Now we come up to the high. Now this is a little different situation here. This is a single bar. It's a single naked bar. And the divergence actually comes when you compare this bar of the premium, the first bar, to this bar. And there is a divergence. If you look at where we were at here, the premium was at 695. Here we're at 705. So there is some divergence there. And if you weren't really sure of how to read that, you definitely had some divergence here, and this was a big divergence, 705 to 732, and you're only one tick lower than that previous bar. You want to get into this short because maybe this is going to work. And ultimately, as you see, that does, and you drop considerably lower. So getting in somewhere around 46.5, 46.25, you already know 44.50 is your target. So you have a potential, again, 8-tick move on this scalp. That's very respectable. And it's right there if you know how to read the premium. Now what's interesting though is that what this is really telling you is that this market is going to be going back up. And that bar is telling you that. This is a strong bar up. And it is not a divergent bar. It is only divergent from this standpoint, but we would normally call this a naked bar. But there is some divergence. It takes a little bit of understanding of how the premium works in order to recognize that. But we would anticipate that this market's coming right back up to 46.75. So if we find a good opportunity to go long, there's your target. Now let's move forward. By the way, we're just going to show you, maybe we're wrong about this. I don't think so. Oh, there it is. Took a while, but there it was. There it was. There it was. Yep. So that's not a scalp. That's a whole different routine. Okay, let's just play the scalp game. All right. Let's play the scalp game. So let's look at this right in here. This is a real easy scalp. We're shorting this. Now, watch the birdie. All right, take a look at this level here. Premium is at 803. We come back to that price and see how the premium is much lower. And then we drop again, and we're considerably lower. Okay, we're at 834. And if you want to know whether that's going to continue to come down, just look at this reading here at 834 compared to this reading at 816. Okay, same price, much lower on the premium. We're going to come down. So all you need to do is find an overbought condition here. You get a nice single bar overbought condition right there, and now you see how the premium drops very quickly. The highs of the premium are much lower than that. So you get into this short at around 45 and a quarter, 45, and down you come, and you already have 44. So there's at least a 4-tick move there. That's a nice, very easy move. But before that occurs, because we really recommend, yeah, you could scalp this and you won't have any problem getting filled on this one. But really, you want to hold that trade until you find yourself in an oversold condition, which doesn't happen until you're way down here, and you're at 42.75. So 43, from 45, there's your 8-tick move down, and the premium told you when to get out too. So you can play that game. And yet you already know you're not done with this either, because this is now even lower. So you can just look for another overbought situation, which is what you have right in here. You got a divergence, short that thing, no problem at all getting filled. But now you get a higher low, and this market now is giving you a little different picture. Well, let's see if we can't tell this, tell a little bit more opportunities to scalp this. Let's go into this low here. 857 on the low, slightly higher than it was here at 860, but not much. And so you can expect that this, if you look at just the step down, 843, 848, 857, lower, 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 and it should be. But the divergence is what you're looking for. This is again, kind of a naked bar. Market's going to go back to 41.25. So all you have to do is find an opportunity to short this, and this probably isn't a good time. It's moved up quite a bit higher. We want to see some divergence. You get it right there, so there was a potential entry, and then it moves just a little bit higher here, but it's still lower than that previous high, and there's your divergence. So whether you're getting filled at 42.5 or 42.25 or even a little less, you know that your target is down there at 41.25. So you got a nice 4-tick move out of that. But then, okay, you're divergent again. And this is indicating you're going to move back up. So, anything here that is significant enough for us to execute a trade. And we don't really have anything in here. This is actually behaving just the way it's supposed to. Everything is the way it's supposed to. But now notice, look at the prices here. We're at a low of 41.25. Look at the premium, 827 right there. When we come to this pivot, 833. Not so good. This should be higher. It's lower. Maybe you don't do anything yet. Then we come to this point, and we're divergent. Look at this high, 735. Big drop down to 759. That divergence says this is coming down. And you've got every reason to believe that that price at 41.50 is going to get tested. You're up here at 42.50 really. So you're expecting at least a 4-tick scalp out of this. And then we come down to this point, and everything is the way it should be in this world until right here. And then we get divergent again. So now you got a decision to make. We're not quite ready to come back down. Maybe you hold the trade. Maybe you get out and you try again. But you already know this is coming down. Okay? And then we come up here. All right? Come to this point here. We're just slightly higher, but we're lower than the previous 2 bars. And that's good. We should be a little bit higher. Okay? We should be a little higher because we are higher. But relative to the last couple of bars, we're lower. So there's your divergence. Okay, so you can short that. And you have a good, successful trade that takes you all the way down. But when it does, you get this big drop down to 854. Okay, down to 854. That's lower than the last 3. This is relatively higher, but it's clearly lower than these previous thresholds. That's going to get tested. So you can either hold this trade and hopefully not get stopped out, or just dump the trade and hopefully it doesn't come back on you right away. Well, as it turns out, you get this divergence again right in here. See how the premium is dropping? We're at 42.75 here, 43 here, but a lower level of the premium there. There's your divergence. Take that, as you know this is coming down. You got 41.50. You're up here at 43. You're going to make money on that trade. Oh, and did it come down? Oh yeah. Oh dear, it came down a lot. All right. Okay, so you see how this is working? Scalping with this kind of information is a breeze. It's not that hard. Very significant drop there. Oh, but this is interesting. Very interesting. Okay, let's just see what this is telling us here. Okay. See how high premium is right there. Okay. 735. That's just where we were back here. And well, actually, maybe that's not as high as we thought. Yeah, that's really not as high as we thought, because we're actually at the same price as we were here. All right. But now, since the premium threshold here was at 751, that was the drop. That's really hard to say whether this is that predictive. Now, if it was way above 735, I would say yes, but right now I can't really say that. It's higher than these other levels here. So from a relative standpoint, that's predictive. But from an actual standpoint, that's a bit risky. That's a bit risky. It's really not as high as I would like to see it. So I'm not going to predict anything from there. Now, next little opportunity for a scalp comes in right in here. Actually, right here. Okay. Now, look at where the premium is here. It's at 808. We're at a higher low, but a lower low on the premium. Not by much, but it is lower. It's at 819. We can expect this market is going to come back. Now, we get divergent right up here, and this is at 41.25. You're at 42.50. You've got maybe 4 ticks out of this, and you make it. That succeeds. Okay. Now, some might say, well, now is that a naked bar? 824. Okay, how do you know? Well, below 824 is 825. Okay, you're at 825 here. You're at 824 here. You're still higher. Okay, you're still higher. So we wouldn't really call this a naked bar. That's not. It's lower relative to the rest, but it's still higher. We're still moving up. All right. So we wouldn't get too concerned about that. Let's see if we can find another one. Okay, so now we have a real nice opportunity here. We move up here, and you see how high the premium goes to 716. We know that whatever happens next, this market is going to continue to move up. That's a big spike, but you fortunately get an opportunity to enter this if you haven't already. And all you need is some divergence. Okay, we're going to go back up to 43.75. Now the market moves down, and you're at 42.50. You already know you're going back to at least 43.75. Is that enough for you to make some money? Well, all right, so you have some divergence in here. Well, actually, let me take that back. Okay, premium is at 808 here. Now, we come down to this bar, and we're lower. We come down to this bar, and we're lower still. We don't want to get into a trade here yet. Premium is at 834. So that price has got to get tested. And finally it moves up to 835. And actually it hasn't moved up at all. It's even lower still. So this isn't a good time to trade. That's not a good opportunity. There's too much to suggest this could be coming back down. So we don't want to take that trade. It works. It is oversold, but that's not really that's not what we would expect, because here we were at 824. We're much lower on the premium here. That's dangerous to try to trade that kind of situation. Nevertheless, even at that level, it manages to go back up. But not a good situation. So we would not recommend trading that. Nevertheless, the market moves up and it goes even higher, and so does the premium. So maybe with a pullback, we can get some divergence and get into this trade. And ultimately we do. We get an oversold condition right there. So we have the opportunity to enter into that trade. It drops a little bit lower, and that's a big heads up. But ultimately, the market is oversold in this level, and we managed to pull out a real nice trade, because now we don't want to exit this until we get divergent, and we don't get divergent. Even at 43.50, this thing has already skyrocketed up to 46.50 and is going higher. And we don't even see a divergent situation until it's at 46.75. So that turned out to be a real nice little scalp. That's how this works. All right, and if you didn't see that, there it is, 46.75. Right up in here, and moving higher. Oh, let's look at maybe one more situation before we finalize this. Let's see if we can't look for an opportunity. Okay. Let's see here. All right, so we've got threshold at 722, moves up a little higher here, moves up a little higher again here, and we're at 47.50. So we fully expect that this market's going to go even higher. So all we have to do is find some divergence. Now we get their first drop here. It's not, we don't really have anything to base divergence on here, so we don't want to trade yet. And it moves a little bit lower, and then we get divergent. See how the premium moves up, drops down, higher low still, and up we go. So we have the opportunity to get in here 46.50 with a target of at least 47, so you get another 4 ticks, nice easy 4 ticks, rides that up, and doesn't really become divergent until here. So you could have waited and taken it all the way up to 48. Very nice. Nicely done. Okay, that's how this works. We can teach you exactly how to read the premium so that you can take advantage of these scalps. It's a beautiful way to, you know, if you're kind of disturbed by holding a trade too long, here's a real nice way to do it. So that's our scalping technique, and I'm Rod Kusin and Spoon for Risk.